Hello everyone, and thanks for tuning into the Financial Investor channel. My name is Brent, and today we're going to be doing our stock market weekly recap for September 24th through the 28th. We're going to be going over some articles I shared over on my Facebook page, go over last week's changes for the week, go over this week's forward indexes, the changes, whether they gained or lost, my portfolio, whether it went up or down, take a look at some stock futures, stocks that have been active here in the after hours, then begin going over stocks that were on the media headlines every day of the week, ending it with some financials. There's a couple, I believe it's a lawsuit. We'll go over the article there, and then end it talking about some oil, silver, gold, bonds, and our rates. So let's go ahead and get started. So this week I released an article on Monday on my website. If you want to check it out, head over to the financial-investor.com. I also made a video, dividend stocks to buy next week going ex-dividend. So best dividend stocks going ex-dividend, October 1st through the 5th. I went over 5 of them there. Two of them have been paying out dividends for 10 or more years. One of them, I believe, had 40 years behind them of just growing their dividend. JP Morgan was there in the mix, and you're buying it at a better discount right now as they have gone down this week. Apple and Salesforce up, CRM there. Oil continuing to trend higher as sanctions are kind of backfiring. Rates got raised up on Wednesday. I ordered a new book. I ran into a real estate investor when I was doing a walk around on a property. I was taking a look, ran into another investor. They recommended 2 books to me. One of them was Becoming Your Own Banker. This is covering whole life insurance, how you can lend yourself money, I believe. So I ordered the book. I want to read a little bit more into this. I think it's interesting to kind of grow outside of my own expertise. SEC came out on Thursday charging Elon Musk with fraud. His stock tanked 6%, but it actually fell, I believe, like 18%. I think we're going to be covering that here in just a minute. Yeah, we are. I have it on my tabs. Facebook announced Friday they were hacked. Up to 50 million users were affected. M1 kind of acting up. I wish I had market gains of 6,000 on my M1 account, because that would mean that I basically doubled my portfolio there. But nope, did not double up. And then this week's changes, as far as my portfolio goes, I moved up 0.52%. And then some of the other indexes we'll take a look at. And I also made a couple purchases, and those stocks paid me out this week. I made a little over $1.90 and some change there, $1.92. So that is what I posted over on Facebook. So taking a look at last week's changes for the week, the stock market last week, S&P 500 had moved up 0.85%. The Dow Jones was the leader last week, having gained 2.25%. I know my wife's Roth IRA, that was the big winner last week in our portfolio. My IRA with Apple did, get a hit of 2% and some change. They did recover this week, up 3%. I believe they're on my list to talk about as well. And Russell last week went down 0.55%. NASDAQ also got hit, down 0.29%. And then my portfolio was like almost barely any change there, but I did go down 0.06% last week. So this week, taking a look here at the S&P 500, they continue to move down slower. They trended up very nicely last week, a 0.85%. This week they are cooling off a little bit. There was a little bit more in there. Interest rates rising. You can see the huge change there between their highs and their lows there on Wednesday after the Fed raised the rates. So they did go lower this week, down 0.54%. Dow Jones, they were the winner last week. This week, down 1.07%, 2 out of the 5 days here on the positive. Year to date, up 7.04%. NASDAQ, up 0.74% this week, 4 out of the 5 days positive, up 16.56% year to date, one of our winners. And then the Russell 2000, down 0.92% this week again. So last week they didn't do so well, down 0.55. NASDAQ also down to 0.29. But NASDAQ is our winner this week, up 0.74%. Whereas this week's loser is the Dow Jones. That's kind of expected. We had a lot of stocks recover quite a bit last week. Financials were in last week's recovery as well, so that really helped them out. Currently, stock futures are looking positive, but this can change at any moment over any sort of social media tweet or announcement. Tariff talk could bring the markets down on Monday. And I always think that's a little bit interesting. I think I shared this over on Facebook with my Facebook subscribers or those that like to follow the page. Now, I put out a little snippet here. The best day of the week to buy into the stock market is on a Monday. Overall market blues is sort of like a thing that happens, and one of the best days to buy is on a Monday. So I thought that was really interesting, kind of share that off. So some of the stocks, this is the after hours screener. Some of the most active stocks here in the after hours, General Electric, coming off those lows. I don't know if they'll hit $10, but I know a lot of investors, I don't know why they want to talk about this one. I think it's been beat into the dirt, but they want to buy it at $10 over in the Facebook groups. I think it's interesting. I think there's much better investments out there. But Apple, JP Morgan, Siri's kind of bouncing back up. They did take a hit this week. We'll talk about them as well as they're trying to about Pandora. Facebook, of course, taking a hit, continuing to trend down lower. Johnson & Johnson, Cisco in there, Wells Fargo, Comcast. So, yeah, there's a lot of big names in there, some financial, some tech stocks in there, being pretty active here in the after hours. So first stock we're going to be discussing is Comcast. On Monday, their stock sold off roughly 6%. This is all due because they won the bidding bet for taking over the British broadcaster Sky, beating out Century Fox. The whole deal is expected to be right around $38.8 billion. So this drove their stock there on money. Whenever any company acquires another company, they're taking on more debt, such as when AT&T took over Time Warner. That drove the stock down into that $29, $28 point. So they are recovered now, but this normally happens with acquisitions as they're trying to calculate how much more debt they're going to be taking in. So SiriusXM also made an announcement. They're going to be trying to buy Pandora for around $3.5 billion. If this deal goes through, that would mean that Pandora would be priced. So they're currently traded at $9.51 with the whole pricing of it all of $3.5 billion. This would make their value around $10.14 per share. So on the announcement, this stock did shoot up high off the announcement, but actually trended lower, ending down 1.21%. You can see that Siri ended at nearly a 9.5% loss this week, whereas Pandora, being the buyout, is up 4.6%. So if you know of a company going to get bought up, such as a small pharmaceutical technology company that you believe may get bought out by a bigger one and consumed, it may be a good, buy it for the consumption. But on Tuesday, Intel got downgraded. It fell 2.13%. This was all due to an analyst, decreasing their recommendation, their price target, all due to the chip manufacturing process. I know me and a friend at work were talking about Intel, AMD, NVIDIA. He's a NVIDIA shareholder, and I believe he got some good gains this week. But kind of discussing those, I thought that was really interesting. They did get downgraded and because of that, but they did recover here towards the end of the week. Friday up 3.10%, giving them 5-day change up 1.35. So if you were to buy Intel on that dip on Tuesday and Wednesday, you would have got a really good opportunity. I think Intel is a great stock. It hasn't got a lot of movement this year, but within the last year, they have done a pretty good job. Up 25% here in the year change. So I was in this stock. I was actually a shareholder between July and around January, February time frame when I sold this one off, but you can see that it had a lot of momentum going from January until kind of peaking here in May. So interesting one there to watch. One that is trending higher on their highs right now is Square Inc., ticker symbol SQ. This stock here on Tuesday, again talking about Tuesday, they blasted off 10.82% as analysts raised their price target for the stock of $125. So big change there, 5-day change up 16.07%. Now on Wednesday, Fed came out, raised their rates by 0.25%. This affected REITs and utilities. So here we're going to be covering a few REITs, Main Street Capital. So we're going to be covering some stocks here that are pretty popular in the REIT function. I know a lot of investors like to look at REIT. So Main Street Capital is one of those ones that a lot of investors like to take a look at. So Main Street Capital, rates came out after, towards the end of the day on Wednesday, but I think going into rates going up, people were already selling out of their REIT positions because they knew by the end of the week, this, REITs as a whole would be trending lower. So Main Street Capital down 2.21%. WP Carey, I'm a shareholder of this one within it's my wife's Roth IRA. This one trended down 2.22% as well. It's going ex-dividend. They raised their their dividend payout by just a very small fraction there. They went from $1.02 to $1.02 and a half a cent there. So not a big, huge raise, but it is a raise nonetheless. KB Homes, ticker symbol KBH, on Wednesday came out with their earnings report. Their earnings did beat expectations, and initially you can see here in the early morning, in the after hours here, their company did trend up very high on the announcement, but did trend down back lower due to their revenue coming lower than expected and projections going lower. So you can see here, shot up extremely high. I'm not even sure, without going over to Google and taking a look at the week change, how much of a percent change they actually made there in the early mornings of Wednesday. Big movement on the up, and then huge downside. So Wednesday lost 3.08% this week, closing down 5.75%. It's KB Homes. Now, REIT-wise, ETFs, check out XLRE if you are interested in REIT ETF. This is a real estate select sector SPDR fund. This one, just if you're kind of tracking all sorts of different REITs, here has SPG, AMT, CCI, and a few others there as well. So not only just, it has a variety of not only residential as commercial as storage, and along with other information items there. So 5-day change down 0.163% this week. Home builders, I would like to kind of discuss REITs along with home builders. So home builders on the announcement, with rising rates, that just makes it more expensive for new house construction, construction. I know loans. I just went to a real estate meetup on Friday tonight. I was talking to another investor. He's going through a refi right now. He's getting a rate right now of around 6%. So he's going out there looking to check out different rates. I know I was quoted about a 5.315% rate. So a 6% rate is, that feels really high. So he'll have to shop around, and I'll have to redo rates after Wednesday. I haven't looked at rates as far as my credit union rates changes for the week after the hikes, but that will be something I will be definitely checking out. So let's go check out Apple. Apple on Thursday was upgraded by JP Morgan, ending up 2.06% on the day. So currently Apple is sitting near all-time highs. You can see it's currently trading at 225.74. The highs for Apple was 229.67, so very high. Year to date, up 33.39%. Great stock to hold long term there. Disclaimer, I'm a shareholder, of course, so my IRA is mainly just Apple. Tesla on the news on Thursday after hours. SEC came out suing Tesla after his tweet. The shares plummeted 13.91%, ending 5-day change down 11.48%. This puts Tesla and one of its worst losses in a single day in quite a while. So SEC came out officially charging Elon Musk with fraud and looking to remove him from the CEO role over at his company. So shares fell by a nice 14% there. So we'll kind of see. I've read a little bit about this, his remark, his comeback. I know that he initially said that he thought funding was secured by an overseas source, and that's why he made the announcement. And I'm still kind of reading into it. I haven't read into it, his remarks yet, but thought it was interesting. This article here coming out on September 20th, which is Friday. So Friday's news: antitrust lawsuit against Big Wall Street banks gets approval. So an antitrust lawsuit filed against 6 major banks: the Goldman Sachs, JP Morgan, Bank of America, Credit Suisse Group, Morgan Stanley, and the UBS Group, on August 2017, received a U.S. District Judge approval on Thursday. The lawsuit alleges that the banks have jointly manipulating competitive scenario in the stock lending market since 2009. Let me go ahead and zoom in. I know you guys on your mobile devices. Hopefully the rest of everything else has been pretty well zoomed in and able to be seen. There we are. So you can go ahead and pause the video. I will have this link in the description below just in case you guys are not aware of the lawsuit currently going on with the big financials. If you take a look at any of your financial stocks, they're probably down this week, such as JP Morgan, down 5-day change 4.25%. I know I talked about this one on my stocks to buy going ex-dividend next week. This could be a great opportunity. This one went down 4.25%. Up year to date up 5.42. They were up at a point of nearly 10% year to date. This news of a lawsuit coming out could be working in your favor, especially if you're a long-term investor looking for a deal. Check out JP Morgan. Goldman Sachs also down 4.7%. Year to date down nearly 12%. You're getting financials at a huge discount, especially with raising rates, but at the same time, who wants to borrow money if rates are going higher? That works out in the bank's favor because rates go higher, they can loan money out. It has to pay more money to these banks, but if nobody wants a loan, nobody wants to refinance because they locked in these 3%, 4% rates. Nobody wants to go out there and refinance to a 5% rate, 6% rate. So no one's going out there and doing borrowing. That's going to hurt the financials even more. So something to kind of think about. Citigroup down 3.25%. Morgan Stanley, huge loss there of 5.75. Year to date, I believe Morgan Stanley is one of the ones that is the leader as far as the lose. No, Goldman Sachs actually there. So as far as financials go, I normally track JP Morgan, Goldman Sachs, Citibank, and Morgan Stanley. If you're looking to get into the financial but don't want to buy a specific stock, you guys can check out ticker symbol XLF. This is the Financial Sector Select Fund. ETF there. This is down 4.04%, but when you're buying into this fund, you are getting a mixture of banks here from Berkshire Hathaway, JP Morgan, Bank of America, Wells Fargo, Citigroup, USB, Goldman Sachs, and so on. So you do get a range of financial institutions here within this ETF if you guys are interested in checking that out. So oil prices did go higher in the end of September. So this week, as you know, sanctions against Iran kind of backfired, pushing oil prices up this week. So up 2% on Monday as the markets tighten around Washington's news of sanctions against Iran. They could see barrels going up to $100 a barrel. That's, $100. I know we were just talking about $70 a barrel not too long ago. So to $100 a barrel, that's going to be driving it up. All this news here, let me go ahead and zoom in. I'm not going to read through every single snippet. Just this week, our sanctions against Iran sort of backfired on us. We wanted the other countries to kind of increase their oil supply to kind of keep prices low. Nobody did that. Oil prices have kind of backfired on us as short supply. That means supply and demand. So oil jumping up. 5-day change up 3.74%. Year to date, oil was up 29.23% this year. So an amazing gain there. US dollar this week started off here at $94.23. It did climb this week as financials, interest rates are rising, dollar getting a little bit stronger. That's going to hurt I don't know why it would hurt the banks there. Maybe this could also be kind of hurting the banks as well. Looks like dollar closed there at $95.13. Silver and gold. Now this is kind of funny. Dollar rose. Generally when you see the dollar getting stronger, you do see silver and gold go down as well. So I look at this jump right here on Friday. Silver jumped 2.46%. I know a lot of investors are out there trying to hedge their, buying bonds, buying silver, buying gold. I think it's interesting. I follow a lot of Facebook groups. I follow a lot of other channels and what everyone's trying to do and kind of hedge themselves in the market. And as silver broke that $14 threshold, people began to take a look at it and say, how much further can silver really fall? How much further can gold? Gold's another thing. I've seen the price of gold, I believe, I don't know where the actual physical limit's at, but I know as far as silver goes, people are a little bit more, they feel a bit more secure to buy silver versus gold. So silver up 2.16% this week, gold down 0.64%. Bonds, if you guys want to, I've seen a lot of investors in the groups talk about bonds. what bonds would you recommend? One, if you want to take a look, is ticker symbol BND. This is the Vanguard Total Bond Index Fund. This one, slightly up here, 0.13%. Another one to check out is ticker symbol VTEB. This is the Vanguard Tax-Exempt Bond. If you guys want to check that out as well, this one is down slightly, 0.04% this week. It's going ex-dividend on October 1st, which is Monday. So interesting one right there. I believe the VTEB has a higher yield than the BND. We can actually head over to Google right now and just check that out. So VTEB, it should tell me the percentage there. Okay, no, so the dividend yield on the VTEB fund is 1.48, whereas the BND fund, it has more something in the 2% range. So yeah, 2.7%. I know a lot of people, they're trying to look where they can kind of stash their money a little bit. Those with $100,000, $200,000 accounts, they're trying to, money is king. So they're trying to put a little bit of money into high yield savings account. I know Goldman Sachs, that markets account, has a 1.9% high yield savings account right now, but BND can also be a nice hedge, giving you a dividend yield of 2.7%. And this one doesn't really change too much. You can see here, just within the year, it looks kind of crazy, but if you actually take a look at how much they've actually lost, it's only 3%, 4% down. With that dividend yield, you may have gone down slightly. You would have still been in the market collecting some money. It just depends what your buying points are. Bonds have been kind of trending down slightly as rates have been going higher. So that is it. And of course, UK did hike their interest rate for the second time within the decade. Here, prime rates crept up from 5% to now 5.25. Short-term rates, I believe, are slightly higher than the long-term rates. So not 100% sure on there. I haven't checked with the financials. Normally I like to talk to my mortgage broker, the mortgage broker in the credit union, to kind of check out, hey, how are rates doing right now? Credit unions generally have a different rate that they loan out than, say, JP Morgan or the other big financials. So if you guys are doing refinances, check out your local credit unions. If you get hit with a credit check, go through multiple places, because depending on who they're running their credit through, you won't get docked within the same month if you do credit checks on multiple locations. So if you're going to JP Morgan, Wells Fargo, if you're going to your credit union, your local portfolio lenders, and just ask them who they're running their credit through and check that out. So that is it for this week. Hopefully you guys did enjoy it. Again, this week's changes for the week. We had the S&P 500, let's go over here, down 0.54%. We had the Dow Jones down 1.07% this week because their gain last week. The Nasdaq kind of recovered from last week's losses, up 0.74%. The Russell 2000 down 0.92%. And then my portfolio change was 0.52% this week, mainly helped out by Apple. Due to last week's loss, they did recover some 3% this week after being upgraded. So very nice gain there. Kind of balanced out everything else out. So that is it this week. Thank you guys for tuning in. If you did like this video, remember to give it a thumbs up button below. If you're brand new to the channel, hit the subscribe button. I highly appreciate it. If you have anything at all to let me know, in the comment section below, leave me a comment. I like reading your guys' comments. If there's something I can do to improve this video, let me know in the comment section below, especially if you give it a thumbs down. I saw I got a thumbs down last week. If there's anything you guys would like to see in these videos or have done, let me know in the comment section. I appreciate it. And that's it. Thank you guys for tuning in. I will see you next time. And of course, as a quick disclaimer, I am not a financial advisor or any sort of tax professional, fiduciary of sorts. I'm just a financial investor myself, trying to take a look at the market, look for good deals, take a look at what's happening in the market, trying to help other investors keep informed of information. So that is it. Thank you guys for tuning in. I will see you next time. Have a great day. Bye.